welcome back. I said back twice.
Back to back.
Back. All right, guys, come on in. Have a seat. Join the class today. Remember, you know the routine. We're talking about home loans, real estate, interest rates, programs, all the above. Don't forget to ask the questions. And if you're just coming in, like Jenna Lee,
What's up, Jenna Lee?
let us know where you guys are at. City and state.
Oh, dude, we might not be screaming on YouTube again.
Man, we're kicked out of the YouTube again?
We got kicked out of the YouTube.
Dang. Couple of thugs.
We're back.
All right.
Keep talking.
We'll see you later, man.
Answer Jenna Lee's questions, man.
Jenna Lee, hello. What do you need to know about real estate? You want to know about programs, interest rates? What city and state are you in? Jersey. What city in Jersey? You know, we used to tell people to move to New Jersey when they lived in New York, but now we're licensed in New Jersey, so we don't have to tell people to move to your city.
Licensed in
We
New
can
York.
keep them in New York where they belong.
You said licensed in New Jersey. We're licensed in New York.
We're licensed in New Jersey too, so
We
there
are.
you go.
Yeah, I'm going to give you that.
anything?
I'm going to give you that.
You know,
We
zero.
We are
The
licensed.
Jersey Shore,
Jersey, sure. I've seen
up
this.
here in Jersey City too.
I've seen
Snooki.
Yeah, I've seen a Snooki. I've seen a Snooki. There was a situation and a Snooki, and that's all I remember about Jersey Shore.
You guys
I bet you.
situation. Eh? How's the weather out there, guys?
Okay, so if you're buying a house, is right now the best time to buy it? What do you think?
So here's the thing: if you want to buy a house, if you want to be a homeowner, if you want your own castle, if you want your own thing, if you want to build equity and all that stuff, then yes, it's a great time to buy.
Why?
Well, two things. One is we have to look at history and the past.
Okay.
It's raining in Jersey. And the past says that when interest rates go down, values skyrocket.
Okay.
And I don't mean just like down a little bit. I mean like when it drops a point, 5 million more buyers enter into the buying industry. So that creates
That's a lot. 5
a
million.
frenzy.
Yeah.
It creates a bidding war, and it creates this situation where it pushes in and squeezes up, and the values just skyrocket. So that's why.
Okay, so for those that are not in the lending business, where are we now? Are we at low interest rates, middle interest rates, or high interest rates? What do you think?
We're still high.
So what is high? What is low?
So in today's environment, the high is 8, the low is 3.
High is 8.
Within the last 10 years.
Are we-
We'll go
okay.
the last 10 years.
I'll probably go 20 at that point. Yeah, even 20 years. The last 20 years. The high is 8.
Yeah, okay.
And the low is 3. So the high is 8. If the high is 8, if it's 8, where are we now close to that?
We're 7.
We're
7 and a
7s?
quarter. Yeah.
Could we ever hit 8?
Yeah.
If
Go
why?
back to
I
8.
mean, are we there? I mean, like, let's just say I need enough concessions. Would I be at the top at 8? 8% interest rate? So let's say I needed $10,000 in closing costs.
Yeah.
Okay, so I could hit 8. So I'm near the top. Look at the count. And I'm near the top of that. So the bottom. What's the lowest rates you've seen in 20 years?
2.75.
2.75.
Natural rate.
Natural rate.
Natural
Yeah,
rate.
because I know you could buy down all the way down to 2.25.
1.9
I don't know.
maybe.
Did you ever do a 1.9?
No.
I never did. I did a bunch of 2.25s, but I never did one. So if we're at 8, so remember, just so for reference, for all those of you watching, the high in the last 20 years is 8%. The low, 2 licensed loan officers close a lot of loans. The lowest we've seen is 2.25. I've done a bunch of 2.25. I don't think I did lower than that ever. So we're at high 8%, low 2.25. Today, if we went to New American Funding, the rate, and this is a perfect loan, perfect, look at the count, perfect. 800 FICO score, 24 DTI, and buying down the rate, you're at 5.75. So now back to reference. We're at 8, high 8, low 2.25 over the last 20 years. Right now, perfect loan, perfect, 5.75 for a 15-year fixed. However, because we do a lot of loans, I can tell you the most common, what's your most common quote in the last week? 7, I think 7.25. I've been in 7.25. So 7.25 at par. Now, par means I didn't buy it now. Par means I didn't spend a lot of money to get a lower rate. And I don't think it's a good idea right now to buy down the rate. I think it's actually a horrible idea, unless you need it for qualifying. If you need it for qualifying, then it's not too bad. But So if we go back to that 8, and you're quoting, you said 7, and I've quoted most of mine are 7.25. 7.25. So if we're 7.25, we're at the higher end of that right now. Is it a good time to buy at the higher end? Oh, I'm losing count.
So if you're interested in buying a house, go to the link up top and you can talk to us. You can apply for a loan right now, or you could screenshot.
Is it smart to do right now? Is it smart?
And start a application. Is it? Well, I started with if you want to be a homeowner, if you want your own castle, if you need your own house, that type of thing, then yes, it's smart. Yes, it's smart. And the smartest thing about it is you get in, it appreciates, that's your equity, and then you refinance, that's your new rate and your new payment. So you get the best of both worlds. If you wait until the rate's at the bottom, you're going to buy at the top. Is that smart?
So Joshua, California Realtor, are we at 8% right now? No, we're not, but we could touch 8. So there's this range of they won't let you go lower than and they won't let you go higher than. It's just the way the algorithms are set up, the GSE set it up, the federal government sets it up. You can't go, like if you said, hey, I want a 9% rate today. I don't know why, but you can't because there's the top end of the rate and there's tolerances. Actually, if we did a 0 down program today, 0 down program, 0 down, you would be at 6.625. 6.625 for a 0 down program. Now, I recommend 0 down programs, not to everybody. No, occasionally it's a good idea. Occasionally it's the best situation that you can in order to get into a house. However, the reason I bring up why are we at 8 and why is 2.25 important? Because no matter who buys or who refinances right now, no matter who it is, my guess, I don't have a crystal ball, but in about 12 to 18 months, we are going to be in an entirely different environment. Entirely different.
What Josh is saying is very important, guys. Very important. So any of you who are interested in buying a house, Josh, California Realtor, said even with rates, people are submitting offers over asking, and it's crazy. His current buyer is doing it right now, which means the competition has already started. So if you're thinking that, hey, I'm just going to wait till the rate goes down and buy me a house, no, you won't, because that competition is going to be there, and they're going to have been doing it. So this guy's buyer, if he shops for the next 6 months, he's going to have an advantage on you because he knows what's going on, and you will not.
And Josh, this is different than the news. Josh is an actual practicing realtor. He's saying he's got offers coming in, and he's seeing offers. You would learn more from the people on the field, the loan officers that are actually doing loans. You ask me, are loans killing it? No. Everybody's still struggling. Are a lot of transactions closing? Yes, they are, but not near what they used to. And are prices in houses going down? No. They flat, sometimes up a little bit, occasionally a tick down, But that's with rates. Remember, 8% is the high and 2.25 is the low in the last 20 years. 8% is the high, 2.25 is the low. We're near the high. If we were ever going to have prices of houses come down, it's right now, but it's not happening.
Yep, and Nestor's hitting on it. Nestor said when rates go up, prices go down. That's not happening right now. Market is crazy.
It is crazy. And then what do you think is going to happen as soon as that pent-up demand comes in? The pent-up demand is all the people that sat on the sidelines because they can't afford at 7% or 8%. The minute the rates go down, which we anticipate third quarter, he says fourth, I think third, but as soon as the rates start coming down, as soon as they come down, all that pent-up demand is going to come in, and all that buying power is going to go after those houses. What do you think is going to happen to the price of the houses? They're going to skyrocket. They're going to go up. Logic. I don't know. I don't have a crystal ball. I could be wrong. I'm usually not. But they're going to go up. And when they go up, you're like, hey, I now can afford a house, but I keep putting in offers, and nobody takes my offer. Oh, God, Lee, what do I do? And I go, listen, you have to talk to your realtor. You have to have a badass realtor so they understand the market. If you have a badass realtor right now, the badass realtor walks in and says, hey, listen, you want that $500,000 house? I notice it's been on the market 45 days. I also notice you're priced right. So, tell you what, I want a discount, $10,000. Because there's no offers coming in, you'll probably get it if you have a badass realtor.
Josh said that he has a house that's for sale that he put an offer in at $467, but they had to submit a $500 because of the competition.
Oh,
backup.
Josh. What area are you in? Because I'm going to say that's a listing agent with a strategy. There's a strategy, and I talk to a lot of listing agents, and I say, okay, cool. Market is $500,000. What price do you put it on the market for? And she tells me, I put it on for $450,000. I said, wait a minute. It's $500,000. I said, yeah, I know it. You know it. And every other realtor out there knows it. So if I put it for $450,000, I know it's $50,000 below market. But the market's going to bear what the market's going to bear. So by the next day, I'm going to have 10 offers in. And I'm going to talk to every one of the realtors because they're going to call me. And I'm going to tell them, hey, listen, we know that the market was $500,000, but the seller wanted to list early. Can you give me your highest and best? I've got to warn you, there are a lot of interest inside of this property. Make sure you give us your highest and best because we're getting highest and best from everybody. Then you have 10 people out there going, okay, wait a minute. I know it says $450,000, but there's a lot of other people in there who are offering. Oh, shit. Maybe we should find out what the market is because the market's going to bear what the market's going to bear. That's what they say.
What Bubba's saying, I agree with 100%. He said, can I get a loan now? Then refinance when rates come down?
Bubba.
That's the move, man.
Bubba.
That's the move.
Bubba, you got it right.
Tell the world.
Bubba, you got it right. Bubba's 29. Bubba's 29. How old do you think Bubba is?
Probably 30.
All right. Okay, cool.
Brian said, how would you prospect, Brian's a new LO.
Okay, cool.
How would you prospect to realtors as a new LO, open houses, cold calls, etc.? Thank you.
So Brian, we're about to teach you something. You're going to learn this.
Oh, Josh is in the high desert.
Well, what's up, Josh? Victorville. Okay, cool. So, Brian. Did I say it enough times? Brian. This is a very difficult industry, unbelievably difficult industry. And it is a knowledge-based industry. Regardless of what you're seeing on the TV or you hear, you see, I mean, I have loan officer friends that drive Lamborghinis. I do. They make a lot of money. I have a lot of loan officer friends that make over $1 million a year in the right market. Not in this market right now, but in the right market, you make a lot of money. So, how do you get these people? The most important thing you can do is continually update your knowledge base. Watch us. Watch other loan officers. Challenge things. Don't just listen to whoever your bank is, because there's a lot to this industry.
Also, your
bank,
whole
lot.
They don't always care.
They don't care.
They're like, go meet some realtors.
Yeah. If you're a straight commission LO like Chris and I are,
they don't care.
Nobody cares. They don't care. They don't care if you show up to work. They don't care if you produce. They don't care if you know your stuff. You do something wrong, they care. You're fired. You're out. But they don't care. It's a very difficult industry. You have to know your stuff, and then you have to remember to see people and do right by them. What does that mean? Okay, cool. So that means you're going to get opportunities. So let's just say you have an opportunity to be an LO on a $500,000 house. If you're in a broker position and you take 3% commission on it, you're going to make a lot of money on that one deal. And as soon as that client figures out that you made way too much, you're never getting them again. Never. They won't come back, and you will have burned that bridge. However, if you went the better route and you gave them a competitive rate in the market, and the client figured it out over time, because they will figure it out over time. Not every one of them, but the ones that do will make it worth it. If you give them a good competitive rate, not the lowest possible, because that doesn't exist. You're fighting everybody all the time. But and you give them great customer service, you know what you're talking about, you close your loan, and you have to watch everybody, by the way. You're the LO, and if you're the LO, you've got to watch the processor, the underwriter, escrow, title, the listing agent, the buyer's agent. Why? Because that client is trusting this escrow is going to go through smoothly, and there's a lot of people involved in this escrow. But if you treat them well, and if you're good with customer service, that guy's going to come back 2-3 years later. And that's the hack. Because not only will he come back, he's like, hey, trust me, I got this loan officer. He knows his shit. He will help you every step of the way. If anybody can close it, he can. And then you get that client's brother, uncle, cousin, co-workers. And when you're very good, people come to you. But you have to know your stuff, because if you mess up once, just once, you screw up one escrow, that realtor will never use you again. And I know why, too. It's a lot of money for them. You screw up once. So when I have a brand new LO, I tell them, hey, listen, the most important decision you can make is the mentor you choose. Secondarily, how do you recruit? You do the open houses. Why? Because LOs don't want to do open houses. We do them, but I don't want
We
to.
do?
You do them.
Okay.
You do. He does them, but we don't want to. I don't want to give up a Saturday away from my kid to an open house, but I do it because I'm building a relationship, or he does, because he's building a relationship with the realtor. And that doesn't automatically lock you in. It just gives you an opportunity to talk with that realtor and create a relationship, and then you have to do good business. If you do good business, you can make a lot of money in this business. A lot. Not a little bit, a lot.
Ariel, yes. Pennsylvania, all day long.
Every day.
You need to call us. If you guys are interested in getting a home loan, just go to the top here where it says Standout Store. Click on the link. Click Apply Now to get a home loan. You can get the process started. So Mohammed said yesterday, Woodland Park, New Jersey, house listed for $629, sold for $780. This is going to happen across the country, guys.
Yeah.
All day, every day. Nestor, those are the type of listings that have lines out the door when showings happen. Yes.
Nestor knows. Yeah, that's crazy.
Coming.
Yeah.
Franklin, need a house at 600, 580 score, 1099.
Yeah, maybe. Oh, that's tight, man. That's tight. Well, here's why. Because your 580 FICO score, first off, you don't know if it's really your 580. If it is, great. Then if it's not, let's find out. The only way you can tell is how a loan officer pull it. Not what you saw on Credit Karma, freecreditreport.com, what your bank's telling you, what your credit card's telling you. None of that is real. You need to have a licensed loan officer pull the credit. Once they do, we know what you're dealing with. If it is truly indeed 580, we have to find out why it's 580, because you earned that 580 FICO score.
How do you know it's 580?
That's what, yeah.
Start there.
And yeah, and once you know if it's like 6 recent 30-day lates that brought you from 720 to 580, you're probably not getting a loan because it's 6 recents. But if it's something that happened 2 years ago that just hasn't cleared up and made it through the system yet, then maybe we can. So, can we do it? Maybe. We have to figure it out.
Yep, Josh knows. He said, let them pull the credit. That's 100% accurate. Ali said, I'm in San Diego. How long does it take to secure financing?
Ali, if you gave me everything and you're qualified and you were serious, and that's the most important part, is serious. If you're qualified, 2 hours, 3 hours?
Well, she has an offer in and expecting a 30-day close.
You better have a damn good LO and a damn good bank, and you better know your systems, because if you don't, you're going to be in trouble. If you're looking for financing, if you already have the offer in, that's a problem. So if you're asking how long does it take to fund a loan, the fastest we can legally fund a loan is 11 days, because there's 3-day federal right of rescission, 24-hour LE, 72-hour CD. There's a lot of mandated time frames to protect the borrower. So that's how fast the financing happens. Most escrows are 30 days, occasionally 45, occasionally 21, but most escrows are 30 days. So if you already put an offer in, I'm going to have to assume that you went in with a strong pre-qual letter in order to get qualified, especially in San Diego. San Diego is pretty tough market.
Or were you pre-underwritten? we're underwriting, I would say 9 out of the 10 of our files.
Yeah, 9 out of 10 we're underwriting.
When they put an offer in, it's an underwritten, approved offer.
Yeah.
And that thing can close in 10 days if you need it to.
Yeah, 11. But yeah.
No? Josh. Yep, he said that. Ellie,
Okay.
I have an offer in and expecting 30-day close.
Yeah, that's reasonable. Yep.
Franklin, bankruptcy 2 years ago, building it back.
If you had a BK7 2 years ago, your credit score should have skyrocketed right after the BK7. If it's a BK13 or 11,
Which question?
payback. When you're paying
13.
back 13. If it's a BK13, then you do have to build it slowly back. But usually, right after the 7 discharges, that's the important part. Discharge. After the 7 discharges, your FICO usually spikes through the roof. If not, we have to figure it out.
Allie said purchase is $1.2 million, 20% down with an 800 credit score. I'm going to say, Allie, congratulations.
Yeah.
And give us a shot to beat that rate, whatever
Yeah.
you're getting. All you have to do is send us your loan estimate. Screenshot this right now. Send it to one of these email addresses. Give us a call. And who wins in this situation? You do.
Yeah. And get us a locked LE, probably a locked LE, so we can, we fight to give the clients a better loan.
Nestor Vasquez, can two veterans use their VA loan together for a fourplex? One married, one is unmarried.
Can 2 veterans use their VA loans together for a fourplex? Yes. Just simple. Yes. So you have what's called a VA entitlement, and then you have your rights, how much you're allowed to. you can split entitlement. It's a little technical, but you can split entitlement. So if you guys went in on a fourplex together, you can split entitlement. And you need somebody who really knows what they're doing to pull this off correctly.
All right. Well, okay. Dang, you guys hopped in here.
Oh,
That's
dude,
nice.
we appreciate all the
Bowes.
questions.
Welcome
Facebook,
back.
Instagram, TikTok, and YouTube. We are here for all of you guys. We appreciate you on every single platform. Thank you very much.
My lease is up in December. How soon should I start looking to buy?
We're in March. We're in March,
So,
December.
Looking to buy?
Yeah.
Nowhere.
Yeah.
Getting pre-qualified?
Yeah.
Right now.
You should pull your
Right
credit
now.
to find out where you stand, so we have plenty of time to fix everything. And that way you know, hey, listen, I need to save a little bit more money by the time we're there, or I need to negotiate a gift from mom and dad so I can start working on mom and dad and say, hey, you know what I want for Christmas, mom and dad?
A house.
A $5,000 gift so I can buy a house.
Joshua, will rates drop? Will rates drop? That's my question. Heard it last year and now it's quiet.
Okay, Joshua.
Good question, man.
Good question. Very good question. So, is that the realtor or the loan officer? I think it is the loan officer, right?
He's a California realtor.
Oh, California realtor. Okay, cool. So this is important, Josh. If you're in the business, you need to watch certain things. There's a guy out there in California, he's pretty big. His name's Barry Habib. We watch him. He's one of the sources. You also need to watch the Federal Reserve, Jerome Powell, and you need to know the state of the economy, and you should be watching CPI and PCE. Those are the two big factors.
Tony, Cali Boy, Ali, all of you, hang tight.
We're going to get you. Yeah, we're going to get you. So once you understand all of this, you understand that it's cyclical. It goes up, it goes down, it goes up, it goes down. And it's a cycle, and the cycle is usually 7 to 10 years, somewhere in that range. But if you go back through the history, you'll see it over and over and over and over and over again with an occasional crash. So the chairman of the Federal Reserve, his name is Jerome Powell. Jerome Powell actually speaks for the Federal Reserve, but he is not the entire Federal Reserve. This is him. You need to know who he is. So he has said, based on all the economic factors, we anticipate 3 interest rate reductions in the calendar year 2024. And the market went crazy when he said that. Holy smokes. And more importantly, he said, I believe we've reached the peak of the economic cycle, which means that it's going up, we peaked, which we're paused. And we've been paused for about 6 months at 5.25 and 5.5. Those are two different rates, but 5.25 and 5.5.
Thank
we're
you for the hearts,
paused
guys.
right now. Appreciate you guys. We're trying to help you. I'm trying to help Josh right now. Helps anybody else. But Josh, as a realtor, you need to know that as soon as the Fed says, yes, we're reducing interest rates by 25 basis points, the market's going to respond. Another thing you need to know, Josh, is that the mortgage rates are not based off of the Fed prime interest rates. Fed funds rates, what they call it. It is based off the 10-year bond, but the 10-year bond yield, 10-year yield, but the 10-year yield has to compete with market forces. And then there's a spread inside of there. So the minute we heard him say, we believe we've reached the peak of the economic cycle, the 10-year yield didn't move, but the uncertainty in the market priced in 225 basis points and dropped 100 basis points almost immediately. That's why you saw interest rates drop about 4 or 5 weeks ago. When CPI came in a little too hot, a little too high, a little too hot, the Fed said, well, I don't know if I anticipate things getting better by the March meeting, and rates went back up. Not because the yield went back up, but because the uncertainty in the market went back up. As soon as the Fed comes out and says, yes, I believe we've reached the peak of the economic cycle and I feel comfortable cutting the basis points. At that point, it's going to go down. The uncertainty spread is going to go away. And then the actual market forces are going to start driving it down. When that happens, chaos, dude. If you're new at real estate, it's going to be crazy.
Josh is about to get
Crazy. You're going to get rich. If you do it right, you can get rich in this business. You can make a lot of money in this business. It's a difficult business, but you have to follow this stuff. Follow people like us. We'll help you. Don't believe everything we say. Check it. If I'm wrong, please call me out.
You're wrong.
I'm not. Oh. Okay. So,
Ali, sounds good. I'll give you guys a call.
cool. We're here for you, Ali.
Diego, how accurate is Credit Karma?
It depends. If you want to know what Credit Karma says about you, and they give you their score of what they say about you, they're 100% accurate of what they say about you, and you want to know what they say about you. However, if you want to know what a loan officer or a bank says about you, and you look at Credit Karma, it's like reading the National Enquirer to find out the news. There might be some truth in there, but probably not. Is that good?
Credit Karma uses a different thing than we do. We have to pull it a certain
He's
method.
politically correct. I'm not. That's how things work.
So, Diego, what I'm going to say is have us pull your credit. There's no obligation. There's no cost. It'll let you know where you're standing. You'll be on the track to buying a house.
And you can do it without even talking to us. Just go up to the link at the top, log in to apply, and we'll pull credit for you.
Hell yeah. Joshua said, not very. You're right. Credit Karma. Cali Boy Forever. Do you guys have loans for bad credit without docs?
Oh, my God.
Wow.
Let's see. I got no docs, no income. I might not be a citizen based on that. Hold on. I might not be a citizen based on that. And I don't want to give no docs. And I sure as hell don't want you to know about my credit because it sucks. Can I get about $500,000? What's your answer?
Cash.
All right.
You're gonna have to bite the bullet on one side or the other. It sucks, but unfortunately not. Thank you for following. Thank you for the love.
Appreciate
Tony
you. Thank you very much.
Said tap the screen, guys. Show them some love.
I appreciate you, Tony. We love you, man. We appreciate you, Tony.
Frances says hello.
All right, somebody's giving us I don't know if that's your tirade. I do most of the tirades. I just go on, man. I talk at 75 miles an hour with freaking 95 mile an hour gusts.
Like,
what the hell's going on? I got that from
breaks?
Zig Ziglar, by the way.
Diego Villarreal said 650 score, $30,000 debt, $90K a year.
Yes, let's get you a house.
Heck yeah. Diego, you're right in the wheelhouse. Give us a call. User 7932. I just lost 3 offers on a house because of contingency that I will have to sell mine first. Suggestions? You got it, Lee.
Okay, you gotta have a great realtor. That's the suggestion. You gotta have a great realtor, and then you have to have realistic expectations. Here's what I run into a lot. Somebody says, "Hey, listen, I want to buy this $600,000 house." All right, cool. That's awesome. I'm gonna sell my $500,000 house, and I'm going to take the proceeds to buy the $600,000 house. All right, simple. That's called a contingent transaction. No big deal. Happens all the time. All right, cool. But when we run the comps, the market isn't $500,000 for your sale price. It's $480,000. You're like, yeah, but I'm going to hold out till I get $500,000. That's not a realistic expectation. If you're putting yourself into a situation where you might have to move fast, you need to know what the market is and what the quit sale market is. Quit sale is if I have to sell it fast, because there is a price where you drop your house enough, you will sell it. You'll sell it right now. Because it's a market. It's not brain surgery, it's a market. But if you're trying to get top dollar for yours and you want that guy who's selling his house to hold on until you make top dollar, that's not a realistic expectation. And that does happen. And we've seen a lot of people, and when I talk to them, I'm like, hey, listen, the market says, you're saying 500, but the market's 480. You're like, yeah, my neighbor sold for 500, so I'm sure I can get 500. I'm like, no, the market, your CMA, comparative market analysis, says 480. When I pull comps, 480. Everything says 480. If you're willing to wait for a very long time, you'll probably get 480. But if you want to sell fast in a pinch, you better be ready for 465. And that's a realistic expectation. So you should set it up in the beginning. Now, here's the problem. If you get an unexperienced realtor, they just want to take the listing. They'll tell you whatever you want to hear to tie you up into a contract so that they get the contract, because that's how they make money. And they're like, hey, 500? Yeah, I'll get you 500. Well, how do you justify 500? Well, my marketing's amazing, and have you seen me? I'm very good looking, and have you seen my business cards? I have a Vargas. Does anybody know what a Vargas is? I know. So I have a Vargas. That means I'm great at what I do. Vargas is badass, by the way. He is, right? So it has to be realistic expectations and understand that it's a business transaction. If you treat it like a business, we can make it happen.
Max and Mimi, now I'm going to give you the answer.
Oh, shit. Okay, good.
Max and Mimi, I need you to pay attention.
Pay attention.
Pay attention. We have a program called NAF Cash.
Oh, yeah.
That will allow you to purchase the new home while you're still selling your existing home. Now, your new home is going to have a rent back. Your old home is still going to have the mortgage payment. So if you're okay with these two things, we can help you cross that bridge. It's a special program only here, proprietary at New American Funding. Chris and Lee are specialized in it, but this program will solve your problem. So what Lee said is 100% accurate. To put a cherry on top, we have a program that's going to solve your problem. So all you have to do is, time for a commercial.
If you need a badass loan, call your badass loan officers. Your badass loan officers work at New American Funding, and you can reach their private cell phone numbers by calling right here or texting. Secret code you should know. Don't call Horror Live because we're not going to answer. His phone's on Instagram. My phone's on TikTok. Ain't going to answer. Ain't going to answer. Ain't going to answer. We got a computer on Facebook, another computer on YouTube, but we are not going to answer. But as soon as we're done, call us and we'll talk to you. Bye.
Yeah, I like that one.
Cool.
Thank you for the love. Level Up Academy.
Appreciate you.
KQ5. If I make 100K with a 700 credit score, can I afford a $450,000 home with FHA? I think he's right in the wheelhouse, man.
Yeah, you're right in the wheelhouse.
Yeah.
You're right on that line. Right on that line. KOS. It's going to depend on your tax base, your interest rate, and don't go after a new build. Don't go after a new build if you can help it. I mean, if you can point your car away from new builds, don't go after a new build. Because if you go after a new build, they will hurt you in ways that you don't even know. For years, they will hurt you. For years. If you guys want to know, ask a question. I'll tell you.
Kelly Boy Forever says maybe list your house for sale first and then do a lease back for 90 days. That's an option.
That's an option.
But our program, you're going to buy cash, which means they're not going to accept the other offers. They're going to accept your offer. It's a cash offer. It's special. It's way better. Creepy.
You got to say it right. You got to say it right, man. Creepy.
How high is the loan amount on the new Fannie Mae 5% down program for multi-unit?
4 unit on a Fannie Mae? 4 unit? I think I saw 1.6.
I don't know that one.
I think it's, I'm going to guess 1.6 in LA. Yeah, pull it up. He's going to pull up the guideline real quick. But I think it's 1.6 million. And the way it works is if you're buying 1 unit, there's an amount that you can buy, and it's based off your county. So if you're in San Bernardino County, it's here. If you're in LA County, it's here. It's 2.2 million. Oh my God.
Or 1.4 to 2.2 depending on where you live.
Yeah. What 2.2 million is the high on a Fannie 4-year 5% down. That's crazy. That's crazy. And this is why, like, literally, we're both licensed loan officers. We both close loans. We got to check the guidelines on a lot of questions.
Yeah. Too much.
A lot of questions. Cool.
Way too much. Calibre Forever, I was talking about 50% down. Remember, that's the guy that said, can I buy a house with no docs, no credit?
Then yes.
There you go, Calibre.
Yeah, we're here. We're here for you.
Yeah, money talks, man. But if you have down, you can make things happen.
This is a little hack in life. Cali Boy Forever. Cali Boy Forever. It's a little hack that not a lot of people know. If you got cash, the rules don't always apply to you the same way they apply to everybody else.
I mean, I can get to the front of the line?
Yeah, what?
In the club?
Dude,
everyone?
Disney doesn't even hide it. They're like, you got cash? Screw those people.
Screw
the poor people. You go to the front. You can pay an extra. By the way, it's worth it, right? You pay an extra $200 all day long. Yeah, all day long, man. It's way worth it. It's way worth it.
So if you guys are ever at Disneyland, get the fast pass.
Yeah,
always.
Yeah, if you can afford it. You can afford it. Yeah, if you can afford it. If not, take your kids. If you can't afford it, yeah. You've been at the spa where you can't afford it, dude. This one
it sucks. Nestor Vasquez.
But you're not there now.
He told Diego Villarreal, you can use my FICO app, pull your FICO 245. Those are the scores you need. There you go, Nestor. Thanks. Frances, I just started the home buying process and I'm a nervous wreck.
Oh, Frances. Here's what you need to know. You need to know one thing. Call us. No more nerves?
That's it.
Yeah, no more nerves. Yeah.
Easy peasy.
We'll walk you through the lending process. If you don't have a realtor, we'll walk you through the realtor process. We'll tell you who does what. We'll tell you whether or not you should be freaking out or not. The word is never freaking out because we'll make sure that you're properly qualified before you go in to buy the house. In fact, if there's even a little bit of nervousness, even a hiccup, I'll send you through a TBD underwrite. What's a TBD underwrite? You get fully underwritten, not pre-qualified, fully underwritten before you offer. So once you offer, there's no question, that's your house.
Yeah. Let me give you a most recent situation that I was
Oh, tell me it.
Most recent. So we were in escrow in Texas. I'm not going to disclose anything.
Okay.
But a last thing popped up, okay? IRS.
What?
Last minute popped up.
What does IRS stand for?
Internal Revenue Service.
Oh.
Now.
Dude, when you say that, it just sends chills.
I know. I'm surprised the system still works.
Sends chills down my spine.
So what happened was it popped up. We're delayed on closing now. We're past the close of escrow.
What?
Agents freaked out.
Agents freaked out.
Buyers freaked out.
Buyers freaked out.
And I said, guys, don't freak out. We've been here before. No one has mentioned anything about canceling. No one's mentioned anything about backing out of the deal. This is still going to move forward and close, and it did.
What?
So what that means,
When did we close it?
This is for Frances.
When did we close it?
Last week.
Okay.
This is for Frances.
Badass, man.
Okay, Frances, we know what we're doing. We know
Yeah.
when to stay calm. We know when to freak out.
Yeah.
Okay. So if you want to deal with someone that's going to keep your temperature at a normal degree all the way through, give us a call. We'll help you.
Yep.
Ed Weezy, does the seller see all the buyer's financials on the
Ed
offer?
Weezy.
Income, credit,
Dude,
DTI?
I like that. Ed Weezy.
baby.
Ed Weezy. Does
Ed-
the seller financials on the offer, income, credit, DTI? No. No.
Unless
No.
they ask.
No. Well, some
are
of them
nosy.
want a credit score because they want to know if they're dealing with a credit-worthy person.
Some want full DU.
And sometimes they'll talk loan officer to loan officer for a full DU. DU is going to give everything. It's rare, but it happens. And there are some times when they say you must cross-call with my lender. And in that case, I literally take the package that I have and I redact important information and I send it to the loan officer. And then the loan officer pulls it, builds his file, and says, yeah, this loan will fund. So it does happen, but it's not the norm.
Yeah. So everyone, TVG, King Twisted, User, Jose, we're going to get to all your questions.
Oh my
okay?
God, there's a lot of
Scooter.
you guys. Thank you so much. We appreciate you. Heart it up. Let everybody know. Throw us some balloons. Put a mustache on this guy.
Curtis Beagle, wife and I needed to know where to start. 700 credit score, but I have 2 years removed from Chapter 7 bankruptcy.
Oh,
man.
congratulations. If it's discharge
ready.
date, you're ready today. It's 2 years from the discharge date on FHA, right? 2 years at VA, FHA, 2 years from the discharge date. If we went conventional, it would be 4 years, but we're going to try FHA right away so you can go right now.
Heck yeah. Josh said stressful journey, but very rewarding. Heck yes. I ain't. Yes, man, I'm very blunt.
All right. Appreciate you,
Yes,
Joshua.
man.
Appreciate you.
Scooter, I'm 70K, 340K home, 615 credit score. Can I do it?
You're right at it, man. You're right at the right at the line.
Fireworks!
Right at the line. Yeah, fireworks. Who shot Kennedy? Ooh, that's funny. Who shot Kennedy? Fireworks. Look great. Looks pretty great.
Nice.
Who's there? Who's there? We got questions on. Don't forget all the platforms, man. You're looking at
Too
one.
many.
You don't think
Too
okay.
many.
Facebook, TikTok, Instagram, and YouTube. We appreciate you guys. By the way, if we ever get banned, we do get in trouble. We've been in trouble on all the platforms for saying something. I don't ever know what. But they say you can't go live for a week. You can't go live for a week. It does happen. We're on all of them. Real simple. Same thing. At Chris_and_Lee_mortgage. And you can figure out how to buy a house. We're here to help you.
Follow us everywhere, guys. King
500
Twisted.
credit. What kind of house can I afford? Nothing. King Twisted. Nothing.
What is
Nothing.
DA?
Nothing. Nothing. Maybe if you're a vet. Maybe. But we need to get that 500 score up. I don't care what they say. 500 is going to be a problem.
Bellsmont. What about bankruptcy chapter 7?
2 years out of discharge, we start moving, man, right now.
Or if it wasn't your fault, which I believe you.
What's the problem with new builds? The new builds. Okay, so here's the fast version. He doesn't like the long version. I don't want to make him mad because I got to sit next to him. So the fast version. There's a lot of money in this business, a lot of money, and the builder wants to own every piece of it. When I say a lot of money, I'm going to tell you, on a $500,000 house, listing agent gets 3%, buyer's agent gets 3%. So that's 6%. So on the real estate side, there's $30,000. On the loan side, there's the front end of the loan. That's where the loan officer does it and the bank gets paid. But there's a back end of the loan where they sell servicing rights. Let's just say 6% also. So there's $30,000 on the real estate side, $30,000 on the bank side. There's $60,000 total on a $500,000 purchase. What the builder wants to do is say, hey, you don't need a lender. You don't need a realtor. Use us. Why? Because then they get to keep the listing and the buyer side, both of them. They also tell you, don't worry about your loan officer. We have our own lending. Why? Because they get to keep the front end and the back end of that. So they make $60,000 to keep you in house, and you don't have proper representation. If you have your own realtor, you have proper representation. If you have your own loan officer, you have proper representation. But the builders don't want that. They play dirty. Dirty. And that's just scratching the surface.
Leyland Milan said, I hate builders.
Yeah, me too.
Cynthia Vargas says, got pre-approved with Veterans United, but manufactured home requires 640 credit score. I don't know what to do.
Yeah, that's not. If that's what Veterans United is telling you, then one thing is absolutely for sure. That is what Veterans United is telling you. I can also say that there are other loan officers that will not tell you what Veterans United is telling you. There are many loan officers who will say, hey, listen, the VA loan requires a 620 FICO. And for their bank, they're correct. For their bank, they are correct. But if you went to the VA guidelines, because we have this thing called Google right now, where VA actually puts the guidelines out, and you said, what are the VA guideline requirements for FICO score? The guideline will say there is no requirement for FICO score, which means it's up to the bank. And the bank gets to approve it. Some banks that say 620 have chosen, I don't want to work with people less than that.
So Cynthia Vargas says, like, do you require that score?
We go straight off the guidelines. We're VA direct. We have no technical FICO requirement. Now, there are catches because sometimes for manufactured, they do want you be on a permanent foundation, 433, engineering cert. With a manufacturer, it's a little bit different. But you have to start with the people that you want to work with. Go with that.
Cynthia Vargas, I'm going to ask you to call us. Just screenshot this right now.
You're just bold, man. You're bold like that.
Talking.
I try not to beat up the other guys because they're trying to make their living, man. They got to make their commissions too.
So how about this? That is correct for them if that's what they say. That is not correct for us. Call us.
Okay, cool.
Tiva G, can I assume a loan with the same loan conditions if I'm taking over a payment for a relative?
Maybe. It's a rare case. It's called an assumption. It's a rare case. You have to go through underwriting. The reason you would do that is because they have a very low interest rate. But there's something called continuity of obligation inside of the VA guidelines. And the VA guidelines say, hey, listen, why, or not VA guidelines, all guidelines. So they would say, why would I just give you that loan? You're selling it technically, and you could be doing some kind of secret deal on the back end that we don't know about. So there's something called continuity of obligation. So one of the tricks that people try is like, I'll add you to the deed, and then you can assume it. But the continuity of obligation guideline says you have to have been on that deed for 6 months or 6 payments, depending on which guideline, before we can even entertain it. And then, after that continuity of obligation is met, maybe. So the answer to that is maybe.
All right.
That was a lot, right?
Do you work with combined credit?
Sure. Actually, what you're talking about is called blended credit. Blended credit. So what does that mean? What? So you have husband and wife. Husband, pull FICO. 3 FICO scores, get rid of the high, get rid of the low, keep the middle. That's his operating FICO. Then you got wives, 3 FICO scores. Take away the take away the high, take away the low, there's the mid. Now the lower of the two is called your operating FICO score for the file. That's your operating FICO score for the file. That's the traditional way of doing things. However, there's a few, Fannie Mae, Freddie Mac, who've come out with something called blended credit, where they say, hey, listen, husband has an 800 credit, wife has a 620. Normally, we would go with 620. But we have a situation right now where we can blend the two and come up with a blended credit score. It's a specific way to do things. It's not every loan. It's a specific way called blended credit. Yes?
You got it, Cynthia Vargas. You're welcome. This, really? She said, this is the 3rd company I go to, and they say that it's the beginning and then no. I'll reach out feeling a bit disappointed every time. Thank you. So it sounds like the loan officer.
I would send you straight to TBD underwrite. If that was the case, if I even thought you've had a hiccup in the past, you're going to TBD underwrite. I want you fully underwritten before you make another offer. Fully underwritten.
So it sounds like people are baiting you and then saying, we can't do it.
No, that doesn't happen.
But, yeah, we'll
I'm
treat
joking.
you right.
It happens all the time.
We'll treat you right. Like Lee said, we'll put you through underwriting. Curtis Beagle, awesome. With that said, we make $125K a year, but we don't have money for down. Suggestions?
Okay, Curtis. First off, $125G a year, I suggest you save a little bit of money. So let's start with that. But if you can't, you got kids, whatever it is, you can't. We have down payment assistance programs. Some of them are not bad. I'll give you one that's the craze, but I'll also tell you that I'm not a fan of it. And that's called the California Dream for All. I don't know if you're in California, but California Dream for All. California Dream for All says that they're going to get you 20% for your down payment. 20%? Wait, what? 20%? Yeah, $500,000 house. They're going to get you 100 grand. Okay, cool. It sounds great, right? Sounds amazing. If you look at the commercials, it's amazing. If you listen to some of the loan officers, it's amazing. But once you read the guidelines, here's what it says. We're going to get you 100 grand, but we want it back. Wait, what? You want that 100 grand back? Yeah, we want that 100 grand back. You're in business with the state of California. We want that 100 grand back. And you know what? We don't want interest. We want shared appreciation. Why? Because interest is low, appreciation in California is high. We want shared appreciation. So not only are we in business with you, state of California is, but we want appreciation. Oh, one more thing. If we sell and only one of us gets made whole, we want first out. We get our money before you get one dime. So, is that a good program? Maybe. If it means the difference between not getting a house and getting a house, I say yes. But if you can do it without it, do it without it. Go back to you. You have, I think it was $115,000 income. That's great income. Great, great, great. We love that income. We do have down payment assistance programs. He quoted one today at 6.625, where they will cover the down payment. Still got to negotiate closing costs, but that's a doable thing. So can we make it happen? Yes. Do I recommend the down payment assistance programs? Not for most. For most, I'd say try and do it without it. But if it means the difference between getting a home or not getting a home, yep.
Honeybee Home, 110K revenue through $35,000 debt, 660 score. How much can I afford?
Revenue.
Yeah, that was a tough one.
That's a big word.
Income?
Dude. Revenue. I don't know if revenue is income. If revenue is income and we got a 660 FICO, we're probably looking 475, 500, 475, 500, somewhere in that range, yeah.
You need to call us user 7555.
Yep.
Oh, that's not the right person. You need to call us Honeybee Home.
Honeybee Home.
What can I do if I want an owner builder my own house looking at convention?
I think it says looking at conventional and probably nothing. Probably nothing. User 7755. There is an FHA, what's it called? One-time construction? Mm-hmm. One-time construction loan. There is a VA one-time construction loan, but they're very difficult. They're very difficult. I pulled off a lot of 2 or 3K loans. I've never pulled off a full FHA one-time construct or a VA one-time construct because by the end of it, nobody wants to do it. There's a lot inside of it, and there's a lot of catches in these things like you wouldn't believe. So conventional is in the business of helping you own houses, not become a builder. So if you're owner builder, there's a very specific way you have to do that, and you can't just go, hey, listen, bank, can you trust me that I have a general contractor's license and I know how to do things and I know how to do designs and permits and everything and I know how to manage crews and put it together and get a certificate of occupancy? Can you just trust me? Banks don't do that, not as a rule, unless it's a construction loan, in which case it's a business and they want licensed general contractors.
Kelly Boy Forever. What city are you guys located in?
I am located in Riverside, California right now. So is he.
All right.
Yep.
Jose Garcia, give us y'all's thoughts on builders offering to pay for closing costs or give back up to 20K on upgrades.
You talk on that one.
Okay, so screw the upgrades.
Screw them.
Pay the closing costs.
Pay them.
Yes, and take that $20,000 and buy down the price of the house. So if they're selling it to you for $600,000, tell them I want to buy the house for $580,000. That's $20,000 right off the top. Now, for a lot of people, they'll say that's only about $30 a month on a payment, $50 a month on a payment, whatever that is.
Why don't you buy down the rate?
Or why don't you buy down the rate? But here's what's going to happen: is if you buy the house, let's say FHA, you're going to put 3.5% down, 5% down, 10% down, less than 20 for sure, which means you have mortgage insurance. Now, when the rates go down, your 580 is going to be, your 580 is going to stay there, but the value is going to skyrocket so much you're going to have a lot of room inside of there. Now, what you're going to do is refinance when the rates go down. 1, your payment's going to drop because you're going to get a lesser rate. 2, you might have the opportunity to remove mortgage insurance entirely because that equity is going to be used as that 20%. And now you have a dirt cheap payment and all that equity. And then down the road somewhere, put some nice floors. Get rid
so
of
give me one of the things that the builders do dirty birdie. Give me one thing they do dirty birdie.
They try to cut out all your people. They try to cut out your agent. They try to cut out your lender.
Oh, here's what I'll give you one. They give you dirty birdie. They give you dirty birdie. Here's what they won't tell you this part. They're like, hey, listen, you know what? We got this beautiful complex that you're in. It's an amazing complex. Yes, yes, yes. And guess what? You're part of an HOA. The HOA makes sure that everybody follows the rules and makes sure their grass is cut. And we left the backyard for you to design any way you want to. Sounds wonderful, right? Okay, now you're in the house. 3 months later, there's a knock on the door. Hey, your backyard is not designed yet. Our HOA requires you must do the landscaping to do your backyard. But wait a minute, it's nothing but dirt. I planned when I had some money to pour some concrete and put some grass. Yeah, you got about 2 months to do that, or we're going to start fining you. Does that happen? Mm-hmm. And then you're like, wait a minute, what, I have to? Yeah, you signed the contract that says you're in the HOA. Well, why didn't the builder take care of it? Because they said...
They're salesmen and they lie.
What? Does that happen?
All the time.
Dude, it sucks, right? It sucks. And then you're like, I just bought a house. I'm barely making it because I just got on the edge of buying the house. And now all of a sudden, I have $20,000 concrete bill. Mm-hmm. Wait, what?
Out of nowhere.
Out of nowhere. And you're like, what? Can I wait to do that? No. Well, what if I put grass in myself? 10 grand. 10 grand. Wait, I don't have that 10 grand. Yeah, but you have to do it. Yes, we help in Georgia. Yes, we want to help you in California. Yes, equity shared loan. I don't know what that is.
Can you help in California with the shared equity loan? That's the California Dream for All.
Yeah, we can. Absolutely. Ed Weezy, we can do it. The way that works, go up. We missed a lot of them. Yeah. But the way it works is you have to be a CalHFA approved lender. New American Funding is a very big bank. We're approved for almost all of the programs. I won't say all of them. And we even have proprietary programs that nobody else has. We have a zero down program that goes down to 600 FICO, right? 600 FICO. So we've got proprietary programs that not everybody else qualifies for because you're not New American Funding.
Okay. What's the credit hack,
man? So we appreciate you. Credit hack. So Darcy. We know Darcy. Shoot, we know Darcy. You know the credit hack. We're about to share with you the credit hack. Let's just say you have a 640 FICO and you're about to buy a house. And you would rather have a 740 FICO because the rates are so much better at 740. So you go up to mom and dad and you say, hey, mom, dad, I'm your son that you love so much. Yes. And I have a request for you. And here's the request, mom and dad, because you love me so much. I would like for you to take one of those credit cards that you've been paying on time for the last 40 years and add me as an owner or authorized user. Owner is better, but authorized user will work too. I would like for you to add me as an owner. And then mom and dad say, what are you going to buy with this? Why do you need that? You say, I'm not going to buy anything. I'm never even going to use the credit card. Heck, when it comes into the mail, you could shred it. I'm never going to use it. But if I am an authorized user or an owner on that account, my history is going to show 10 years of paying credit cards on time. And that one hack will take you, what's the highest you've seen?
That 20 to 60.
60 points in 2 weeks. 60-point credit raise in 2 weeks. So there's a bunch of hacks, but that's one of the bigger ones.
Yeah, do that. Left lane trucking. If I give one extra payment towards my mortgage, does that help to the principal or principal plus interest?
Left lane trucking, you got to know the whole world's a scam. It's a scam. So if you just put extra payment, they won't attribute it straight to principal because it's not in the best interest of the bank. They will deem it an advanced payment, and they'll be able to be justified. They're like, hey, it looks like you just made one extra payment, so you're ahead. Why? Because they make their money off interest. However, if you designate this is to go exclusively to principal, either through an app or on the memo line of the check or however you pay, somehow designate this is to go exclusively to principal, then that's a contractual payment and they have to send it to principal. That is a big deal.
Yeah, so if you're just making these payments, I don't know, but you got to be super specific.
Yeah.
All right, dude, we got a rapid fire. You ready?
All right, rapid fire. Here we go. We only got it. We got about...
Cherry, do I qualify for loans if I'm self-employed?
Yes.
Denied 2018. Why does my credit report say one thing, then when NAF ran my credit, it was completely different?
Because NAF is true for buying a house and whoever else is true for credit cards or automobiles or whatever, but NAF runs a mortgage credit pull. That's what that is.
Cali Boy Forever, if you live in California and want to buy a house in another state, do you have to get pre-qualified in that state?
You have to get the file has to be qualified in the state. You are pre-qualified across the board. So you can go, hey, listen, I'm qualified in California, but I want to buy in Texas. Okay, cool. Then all I got to do is put the property tax base in for Texas and whatever else happens in Texas, and then you're qualified to go there. It's a little bit different in different states. Like, for instance, Cali Boy, tax base in California is 1.25. In Texas, we start at 2.7. So it's a big difference in buying power.
Yeah, so we'll qualify you in any state you want, Cali Boy.
Any state. We work in all 50 states.
Curtis Beagle, we are in McKinney, Texas. We're able to save, but it would be a slow process. What's a good percent down?
FHA is 3.5% down. That's going to be your best overall loan package. But there are down payment assistance programs. Get the process started. We'll let you know what the better move is. I usually recommend you do have the money saved for the down payment. But in some situations, down payment programs are not bad.
Yeah. How soon can you get a HELOC purchased November trying to get another property?
How soon can you get a HELOC? As soon as you apply?
Yeah.
I don't know if you're saying after you bought the house or how long after you apply. I don't know. We need more. I forgot to ask live. One last question I forgot to ask live. Yoni.
Ask.
We're here for you, Yoni.
Okay. Ellie, is 630 FICO okay? FHA loan?
Yes, all day long. It
Yeah.
starts at 580. Better rates start at 620. 630 is good. Ideally 680 to 800.
Cali Boy Forever, why does the house I paid off in 2004 for 425 grand not show up on my credit report?
I don't know, Cali Boy. We can find out. We can
Right.
dig in and find out.
Here's Yoni's question. We could buy a permanent home for me and my family.
Yes, Yoni. We could. Yes, we could.
That's not a question, Yoni. What's the question?
Yeah.
Eduardo, does having a cosigner disqualify you from California Dream for All program?
Yes.
Left Lane Trucking. My city has 100K, zero interest. Can I add that on top of what I get approved for?
Yes.
Cali Boy Forever. Thanks for answering my questions.
We're here for you.
Mama Candy, 588 low debt to income ratio. Coast of Texas. Anything with down payment assistance?
588 DPA is going to be a problem because your 588's a little bit too low. NAF does have a proprietary program that starts at 600, but even that's kind of hard to get into. So your 588 FICO is going to be a problem. Let's get that fixed. We can usually get that fixed pretty quick unless it's recent stuff. If it's recent stuff like 6 30-day lates in the last 6 months, then we have a problem. But if it's old stuff, we can usually fix it pretty quick.
Yoni, I didn't see your question. Please ask it again.
Okay.
Denied 2018. What is the credit score limit for down payment assistance?
Limit? Do you mean downside or upside? So there is no limit upside.
Guideline. I think she
Yeah,
means
guideline. So CalHAFA's 660. There is a 640 version, and then New American Funding has a 600 version. So, but they're not great. The lower you go in FICO score, the harder it is to qualify. What does that mean? That means if I have you qualified for $400,000 and you're looking for a $400,000 house, and you say, hey, I want to do a down payment assistance program, I'm going to say, okay, cool. Let me rerun the numbers. You're now qualified for $320,000. Wait, Lee, you said 400. I said 400 if you're bringing in your own money. If you're asking them to pay for the down payment, 320. Why would they do that, Lee? Well, they're literally giving you the money for the down payment. They're not going to let you redline it. That makes sense, doesn't it? Well, Lee, since you put it that way, I guess, yeah. Happens. I have that conversation like 3 times a week.
Yep. Mr. Nestor Vasquez, I'm interested in the VA one-time construction loan fourplex. Dad is a licensed contractor and has built 5 of his own personal homes. Highly probability of VA approving, question mark, as long as income, DTI.
If you've got the time and your dad's a GC, you're probably in a very
That's
good
the
spot.
best
You need to
spot.
call us.
Yeah.
Yeah, that can be done. It's difficult. I'm going to tell you it's difficult. But if your dad's a GC, he knows what to go through. It's not like building a house. It's like, hey, I'll just break some ground, build some house. No, it's
gotta find
crazy.
nails.
There's a lot of stuff involved
And
there.
screws and stuff.
Yeah.
I am just paying interest principal. Didn't decrease much. I think I'm underwater. 90% of payment is going towards interest. Good interest go down soon.
That's all loans, all conventional conforming, Fannie Mae, Freddie Mac, VA, FHA, USDA. The banks are smart. They're smart and they're greedy. And I hate to say that, but that's the way it is. I work for a bank. I get it. I make a good living because I work for a bank, but they're greedy. And how are they greedy? Here's what they do. They take your payment. Let's say it's $3,000 a month. And for the first 15 years, $3,300 is going to reduce principal. The other $2,700 is going to interest and other payments. Interest and other payments. Wait a minute. I'm only reducing $300 a month? Yeah. When you get to the last 15 years of the loan, it changes. And now the majority of your payment goes to reduce principal. Why? Because they want to make money. And if you don't like them, I agree. I don't like it either. I don't. I really don't. But the alternative is buying it cash, and who can do that?
Or renting.
Yeah.
Taco Dom said, y'all misspelled Kennedy on the thing.
I appreciate you, Taco Don. There's one more spelling error. Help us. We're gonna fix that, by the way. We found out that there's 2 spelling errors, but we figured out that it keeps people watching longer, so I kind of like it.
Yoni, I don't know what's happening to your questions, but you know who to reach out, and ready to hit it, dude?
Oh, dude, you want to hit it?
Screenshot this,
Dude.
because we are leaving.
Dude.
I'm Chris, that's Lee.
We're gonna miss you guys. We've been Chris and Lee. We're out.